But here's the bottom line. They save $300 a month between those two scores. If I could raise that 620 to a 720 score.
Okay, on their mortgage.
And then that money that you're saving, that $300, you invest it somewhere. But
Okay.
let's say it's the stock market. The average stock market is at 9.5%. If we
Yep.
were to go back 50 years, that's the percentage that we're looking at gaining in interest.
Okay.
If you were to take that $201,000 that you would have saved over the 50 years, and
Hello, everyone. My name is Michael Dillard, host of the Financial Abundance Podcast. We have a special guest is waiting. He is going to share financial tips, information about credit, and most importantly, how you can leave a financial legacy because financial literacy is the new currency, folks. With that said, let me welcome the one and only John. How are you doing today?
Mr. Michael, I'm doing well. Thank you very much.
All right. For those who don't know you, what's your full name and what business do you have?
You want my social too? I'm
Oh,
just,
that'd be nice. I heard you got a infinite credit score, you know?
yeah, yeah. No, my name is John Mackey, and I'm old. That's just the nature of being the age that I am. I'm old, but I've been in business for a long time, and I've been in the financial industry since 1987. First as a realtor, then as a realtor and a loan officer, then as a realtor franchise owner. I've owned two of them, and then into the credit education part of the business. Credit education because there was so much confusion at the beginning regarding credit scoring, and then some of the yahoos got involved and decided to make a cottage industry of it. And when they don't know the truth about credit scoring. So I'm also a teacher on credit scoring. I've got some Udemy online platforms. Uh, uh, One's called Udemy, another one is called TabletWise. Um, and there you can get information on credit scoring, the FICO scoring specifically, uh, the idiosyncrasies of that. And I'm an author. I had written a book a couple of years ago prior to COVID on debt collection because that was running rampant.
Mm,
Uh, and now, just recently, another book I just got through publishing
okay,
on
okay.
credit scoring. Yeah.
Wow, sounds like you have helped lots of people with their finances, especially with credit. What's a big mistake that people often make when it comes to credit?
Wow. Um, some people is thinking they know about FICO scoring when they don't, and I'm including financial experts
Okay.
um, that don't know. I've talked with many loan officers, not to degrade a loan officer because I was one, but they don't know about credit scoring. Everybody thinks that they know about credit scoring, um, but within that, it's understanding the process in which people are being judged.
Mm,
And we know that financial literacy is becoming the next big thing right now.
yes, it is.
My question is, how can we create or invest money when we've, number one, never had it? And number two, if we do have money where we're making, um, typically it takes all of our money to live. So your credit score is vitally important to anything you do financially. People that don't have or that do have a lot of money, it's really, I don't want to say it's irrelevant, but typically they're the ones with the higher credit scores anyway. What I'm most concerned about is getting people out of uh, the credit conundrum that lower income individuals seem to have, and the less served uh, of the population out there. I just read a statistic, and in fact, I put a post out there on Facebook on it. There are 28 million people in the United States that are credit invisible,
Credit
meaning
invisible. Ooh.
credit invisible, meaning people that don't have a credit score. Now, you have to understand that people that don't have a credit score, you think, well, they don't have a credit, doesn't hurt them, but it does. See, it does, because insurance, for example, will use it. Some jobs, employment will use it.
Mm.
Um, rental, they'll pull your credit.
Yep.
Um, and so it does become a factor. And I've got many stories about that we can get into later about that. But it affected a nurse that I was working with, who had come from Nigeria, who had her medical degree over there, came here with her husband, and became a part of the medical staff at the Mayo Clinic. You've heard of that?
Yeah, I heard of Mayo Clinic.
In
Yeah.
Rochester. She couldn't find a place to live in Rochester because her credit score wasn't sufficient.
Whoa.
So now she's got to travel 90 minutes every day to go to work, one way.
That's a long way.
So there are those things. But one of the biggest issues that I've had is, okay, if you don't have credit, how do you get credit? Because
Yep.
everybody's looking for credit to get credit. And so I wrote a book. And it's called Credit Geniuses Financial Reinvention, a do-it-yourself guide, and how to become financially savvy in that market. And
Okay.
I wrote that book to help people out. It's relatively inexpensive. Um, there are three versions of it. One is an e-reader, one is a soft cover, and one is a hardcover book. Now that's just gotten through being published. And people can find it on my website. I see under my name there is my website name, Credit Genius,
Yep.
and
Yep.
it's located there, so they can pick the book up there. But the first thing, everybody says, well, you can self-fund on a credit card. Yeah, you can. But a
What's so
credit
fun?
score, self-funding is
Mm-hmm.
where you give an institution, let's say Visa, $500, and they set up a credit card, so it's self-funded.
Okay.
You borrow against yourself.
Mm-hmm.
But part of your credit score is determined based on revolving debt, which a credit card is, and installment debt. So if you set up 5 revolving debts, you're not going to receive a credit boost as much as if you were to start up an installment debt. Then
Okay.
I get the question: how do you set up an installment debt without buying something?
Mm-hmm.
And there's a way,
Oh,
and it's
that's
legal.
tell us.
It's a legitimate way. No, I'm not going to
Okay.
tell you. You got to buy a book.
We got to buy the book. That's I figured that was going to be the answer. You got to
Yeah,
buy the book.
yeah, that would be helpful because it walks you through step by step, and you can use it's using banking institutions, but there are
Okay.
specific banking institutions, and it's not regular banks that you use. It's another form of a banking institution called a credit union.
Oh,
Problem
okay.
is with a bank, you've got to lock up your funds. So if you give them $1,000, and usually with a bank, the minimum required for this is $1,000. So you
Okay.
give it to the bank and then you borrow against it, but you got to leave that $1,000 in the bank. So now you've tied that up.
Okay.
With the credit union, that's not the case. Maybe there I'll stop and then people can buy the book to find out why. But within that book also, I found very interesting in some of my research the history of the credit report, how it started, where it's morphed into right now. Because I'm going off here on maybe a little diatribe here, but number one, the way they watch us right now is unbelievable.
What
Uh,
do you mean by watching this? We got to break it down for our listeners who are new to personal finance.
yeah,
A
how they're
small,
watching
small.
us. You've heard of the book. The quote of it is "Big Brother is watching."
Big brother. They always talk about big brother in the sky or something like that.
Big Brother is watching, and they're always talking about government being Big Brother.
Mm-hmm.
Uh, well, I'm not afraid of government. I'm afraid of uh, companies. Companies
Okay.
are the ones that watch you. And if you get the book, it'll explain all the way through. But it's also the history of the credit card and the history of the credit card and how we've almost gone all cashless and how how you are being tracked through your purchases, either with a debit card or with a, a credit card.
Okay.
Then the fourth chapter of the book is all about credit scoring, the very, very basics. And it was written with uh, for people that are 18 to, let's say, 25, people that don't have any experience jumping into the credit market. So I'm going
Okay.
to
What
stop
would you
there.
say? What would you
Go
say
ahead.
to like a young person, um, fresh out of college? Right? They're making $100,000. They're fresh out of college. What would you advise them to do with their money?
Well, first of all, it depends upon where their station in life is. Are they just getting married? Are they planning on having children? We do know that one of the reasons why a lot of people got rich in the first place, you have to own something. Typically, that's going to be a home.
Okay.
Typically, that's going to be a home. So, and that's where your investment comes in to start. But here's the interesting part of it, and I'm going to do a sidelight here. We took two individuals. Now, what I'm about to tell you, I took through and had a financial advisor, a couple of them, and I described the scenario and I said, okay, now how much would that individual save had they fixed their credit report? So, what I did is I took from a 620 score, mid score,
Okay.
and we went up, compared it with an individual at 720 mid score.
Okay.
And we followed them through life from graduation from college, their first home, their second home, student loans, and so forth.
Okay.
At the end of 50 years, now when you're young, you're thinking 50 years, I can't even think tomorrow. Well,
Mm-hmm.
yeah, but that's the way I was back then too.
Yep.
And now I'm at that 50-year mark. But here's the bottom line. They save $300 a month between those two scores. If I could raise that 620 to a 720 score.
Okay. On your mortgage.
And then that money that you're saving, that $300, you invest it somewhere. But
Okay.
let's say it's the stock market. The average stock market is at 9.5%. If we
Yep.
were to go back 50 years, that's the percentage that we're looking at gaining in interest.
Okay.
If you were to take that $201,000 that you would have saved over the 50 years and every
Mm-hmm.
month invest that into your stock market, earning 9.5% is $5.1 million.
$5.1 million. We can buy a lot of groceries with that.
Yeah. And then who cares about inflation, right? I'm, I'm just kidding. Um,
Yeah.
but we won't get going on that. Um,
Yeah.
so there's a lot of impetus as to why people should watch where they're spending. But we also know that we're being bombarded with ads. We're being bombarded everywhere with ads.
Can you talk
I'm
more about
so,
that? Because I think people don't understand what's happening to them when they get up in the morning.
and that's what I say. What my big brother is watching.
Okay.
That's why it's so important. But no matter where we go now, cable TV. I remember, and I was just coming out of the military back at that time when cable TV was starting, and cable TV was starting with under the auspices that, or for the reason you pay a cable fee, let's say $30 a month, what it was back then,
Yep.
and you get all the programming for free.
Yep.
Now, there
Yep.
are some add on stations that you can add on, but all these stations were there for free.
They were free. Tell me about it free. All you had to do was have an antenna, right?
No, no, no. I'm talking about the cable.
Oh, the cable part. Oh, I thought you were talking about the old school black and white tube.
Right. But you connect in with the cable, you spend $25, you get 1,000 channels. Back
Yes.
then it
Yep.
wasn't 1,000, it was 100 channels.
Yep. Yep.
And then you didn't have to pay for or watch advertising. Where do you find a station now, cable TV, without advertising? So we get it there. We get it in beer commercials. You don't see an old drunk advertising beer, do
No.
you?
How
Right?
come? Amazing.
Right. Because people wouldn't buy their beer.
True. True.
Okay. So we have to learn as Americans, we've got to start standing up. We've got to say, wait a minute, what's happening to us? What is happening to me? What's happening to my family? You get the cell phone and your kids have them. All they're seeing is advertising. You go on
Hmm.
Facebook, it's all advertising. You go on Twitter, it's advertising. You go to TikTok, it's advertising. You go anywhere anymore, it's advertising.
Yep.
I'm a big baseball nuts. I just got through watching the World Series. Okay.
All
And
right.
when the manager goes out to the mound to visit with his pitcher,
Yep.
what's on the screen now? It's a picture of them talking, but it's an advertisement.
It's
Can't get away
everywhere.
from it.
Even on the side of the helmets, right? I noticed that on did you see the sign? They had advertisement
Yeah.
big and bold on the side of their helmets.
Yes. Umpires, not this year, last year, were backed up by crypto.
Whoa.
Okay. Where are we going here?
Mm.
Now, I'm not a student. I am a student of it, but I'm not a teacher of all those various things. I've got a professor friend of mine that does, and he teaches at the University of New Hampshire. So I picked his brain a little bit.
Okay.
Okay, advertisement. How about this one? Credit Karma.
Credit Karma. Yeah, I heard something recently about them.
What about what is your credit score? No, you don't have one credit score. You've got
Right.
many.
Yep.
And Credit Karma only gives you two scores, where if you go for a mortgage, you need three.
Mm-hmm.
Now I'm going to totally throw you. Is that when the FICO score started, it started as FICO 95, that morphed as FICO 2. And then right now we're on FICO 10 and FICO 10T. For the mortgages, it was FICO 2 that they use, FICO 4, and FICO 5. So they
Okay.
don't even use the most recent FICO scoring for a home loan.
Whoa. That's deep.
And I could throw so much information at you, and I'm not trying to scare anybody, but we got to wake up.
Why do you think that is?
I can tell you what they say is because it gives them a better score than FICO 10, because FICO 10 in FICO 10T has removed medical debt. It's removed some other extraneous things that they were mandated not to.
Okay.
Okay. Now they're coming out with a new system, FICO 10T. Um, I'm going way off tangent here. It's going to change the credit scoring system again, and nobody knows how this is working. I mean, I know how it's going to work, but the majority of the population simply doesn't.
So how can people like first time home buyers looking to buy a house and then also looking to buy a car, how should they manage credit?
First of all, make your payments on time. That's the most important part of your FICO score is your payment history. That's 35% of your score. Okay. The
Okay.
second most important is your credit card debt, not installment debt, but your credit card debt. So if you get a credit card, let's say it's a $10,000 limit,
Okay.
and you borrow, let's say $1,000 on that,
Mm-hmm.
now you're at 10% utilization. You get
Okay.
a bad month or something, you need a new tranny, you need new tires.
Mm-hmm.
Okay, now you spend another $800. Now you're at $900, and you've got $1,000 limit. Did I say 10,000 originally? Let's just go 1,000.
Okay.
Okay, so now you're at 100% credit utilization. If
Okay.
you had a hard score at the time, your score is now going to go down, could be as much as 125 points
Yeah,
based
that's a
on your
lot.
credit utilization. That's right. And it has nothing to do with how much you make. It has nothing to do with how much, uh, what your limit is.
Okay.
It all has to do with that percentage.
Okay. Okay. Right.
There we go.
All right. So you have the new book. You've been helping people a lot. What's your passion? What's your why for helping the 24-year-old person who's like, John, I need help. I want to be able to leave a financial legacy. How can you help me?
I'm going to help with the educational part of it. My, I've always been somebody that wanted to help people.
Okay.
I've never been one, believe me, if I wanted to make money, this is not the job to have. Okay, as far as in teaching,
Okay. All
it's
right.
not a place to make money.
Tell me about it. I
Uh,
notice a pattern, right? Because as you know, when people don't want one, they don't want to pay for the financial knowledge. Number two, they think that this investment that's going to triple tomorrow is better and is real versus using fundamental, sound, proven financial advice that has passed the test of time. They want the new shiny wheel.
and they'll listen to somebody that's standing next to their private jet for financial advice when
Yes.
all I want is the truth. But with the advent of the internet, anybody can get on and tell me sweet little lies.
Because it's like who has more money, the person with the $100,000 jet or the person with the $100,000 money in the bank account.
Yeah, I know, but one's showier than the other, and people start
Yes.
drooling over that jet. I could be just like him. No, you're not.
Yes,
The
yes,
truth
yes.
is, getting rich is a very difficult, the legitimate way.
Okay.
It's a very difficult, time consuming thing. Not that it's hard to do, it just takes a long time to do it. But if you don't do it, you're worse off than if you do it. And
Okay.
at the time that the Lord comes and takes you away
Hmm.
and you're in the hearse, there will not be a U-Haul taking your stuff. behind and being buried with you. You're not taking it with you.
Right.
So why are you buying all these things? A lot of good things out there. I get it. But
So, from an investment perspective, which is the best investment? Stocks versus real estate. Stocks versus real estate. What's your thoughts on that?
I would go real estate first.
Okay, real estate first.
Yeah. Because you got to have a place to live.
Okay.
No matter where you're at, you're either paying for your own mortgage or somebody else's.
Okay.
Okay. There was a big hesitation there because I was always told that what was I always told? I had a senior moment there. You're always told, well, we'll
The,
get,
the real
we'll
estate
accept.
part. Yeah. So basically, which one is better, stocks versus real estate? And besides your home itself, unless you want to add that, so either you have a home, you don't have a home. What's your thoughts on your house is an investment or is really a liability? Okay, now you're in the house. Do you invest in stocks or rental property?
I think that's up to the individual and the comfortability of the individual.
Hmm.
I have no perfect answer to that.
Okay. Makes sense. Basically, what you're saying is your risk tolerance, what you're willing to invest in based on what you're comfortable doing. And as we know, it's always easier for someone to buy into something that they believe in versus having to do something that they don't really want to do. Because we can lose weight, we can run, we can swim, we can do the elliptical. But if we like swimming, well, go swim.
Because you're going to do more of it.
Yes.
Yeah.
Definitely.
Oh, we always need to be saving. And I forget who the person was that said it, but they said when you get your paycheck, pay yourself first.
Pay yourself first.
Take the 10% out, whatever it is you're paying yourself, and
Hmm.
sock that away, no matter what.
It makes
And I like
sense, you know. Yeah, I wish we can teach that more in middle school, high school, the value of investing early because of the compound effect. You know, if you mentioned it early, if you have the S&P 500 average return of say 9%, it's going to double every 8 years. That's powerful.
what is that, the power of 72 or
Power is 72. That's correct.
yeah,
Any
yeah.
last words for the listener? I know you got the book hot off the press. Any last words that you want to share with the audience?
The last words I have are to always take care of your finances because there's nothing worse than being put on the street.
Mm,
And it's being homeless, being without money, it's difficult. And I see so many people that are trying to make a living wage that can't seem to do what they're supposed to be doing. Number one, for a lack of credit, uh, because when you're making 30,000 a year and you're trying to spend 1,500 a month on rent, it's hard to do.
very hard to do. Very hard. That's why, you know, if we as older people can practice sound financial advice, save some money, teach our kids, then now when our kids grow up, they can inherit what we have invested and then they can add on to that in order to continue to climb out of poverty.
That is correct. That and education. That's you. Yeah, education's huge too. So thank you,
Education is the
sir, for
key.
inviting me.
Appreciate it, man. Appreciate it. Let me hit the stop button real quick. 1 second here.